The local share market set to surge ahead of the release of economic growth figures this week. Reports that AGL Energy's board is getting cold feet about splitting the company in two, and just how much is Buckingham Palace worth? It's Monday, the 30th of May, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. A nice weekend?
It was a very nice weekend thing. And you know what? It was a pretty special weekend, actually, because over the weekend, I'm just going to pick a random time and say it was at about kind of 10 a.m. on Saturday. We ticked to over 500,000 downloads for the month, just for May on its own.
Pretty good. We've been talking a lot about hitting that 500,000 mark. I reckon we're going to go 550 for the full month.
You know what? I'm an optimist, and I reckon we could nudge 560, maybe even 570. So we will see. I'm banking on a late surge, obviously, in the next kind of 48 hours. But you know what? If anyone hasn't listened to it as well, go back and have a listen to the weekend edition. We don't really talk about it much. We talk a lot about Safe Word, which is our weekly lighter kind of look at the business news of the week. But we don't really talk much about the weekend edition, which is it's a fun podcast. It's a bit of a recap of everything that happened over the last week. But it's competition between you and me, because you and I are pretty competitive people. Some would say I am more competitive, which is probably kind of proof right there.
No, I'm more competitive.
And this is why we bring in our Fear and Greed colleague, Adam Lang, to be the adjudicator.
That's right.
But if you haven't heard our weekend edition, it comes out on Saturday. It's definitely worth going and having a listen to, or at least put it in your calendar for this Saturday and make sure you check it out, because it is really, we had our best Saturday we have ever had for Fear and Greed. And so I think more and more people are hearing.
I did say that too. Very exciting.
Yeah, it's a ripper. Anyway, enough navel gazing. We have a big show coming up, and after the show, you've got a very timely chat with Elise Kennedy from Jarden Group. It's really all about the tech sector at the moment, kind of what is going on, what the outlook is for the coming weeks and months. So don't miss that one. It's coming up a little bit later on. But the main story today is really, it's a massive week for the economy. Official economic growth figures due for release on Wednesday, and a surge on Wall Street set to help the local market today.
Yes, so much to talk about, Michael. Where do we start? Let's start with the economic growth data. After some disappointing capital expenditure figures for the March quarter, the growth might not be quite as good as expected. Commonwealth Bank reckons it's going to come in around 0.5% for the quarter. That'd take annual growth to 2.8%. ANZ's a bit above that. Floods down the east coast and COVID restrictions stunted economic growth early in the March quarter, but things have certainly picked up since then.
And Sean, helping the economic mood somewhat was the retail trade figures released on Friday. Turnover hit a record level during April, up 0.9%. It was a fourth consecutive monthly rise in turnover, and was really driven by spending across food industries.
Part of that reflected higher food prices, Michael, but also people went out and travelled more over the Easter period. Now, I like this. It's the first time since the pandemic that both food retailing, so think supermarkets, rose along with a jump in spending in cafes, restaurants and takeaway food services. Basically, we just all ate a lot more during April.
It's a big month. Now, Sean, can we bring this all back to financial markets and investors? What's all this mean for them?
Well, look, the big global fear is that we're heading into a period of high inflation, which means higher interest rates and slowing economies. Australia doesn't want to be in that basket. Investors want to see an expanding economy. It wants the growth figures to show some wage uplift, but it doesn't want to see prices out of control.
All right, so while that comes out on Wednesday, the market today should be helped by the big surge in Wall Street over the weekend, following figures showing that consumer spending is up and inflation really not quite as sharp as anticipated.
That's exactly the sort of data that investors and economists want to see. As a result, Wall Street's tech-heavy NASDAQ jumped more than 3% over the weekend, and the broad-based S&P 500 was 2.5% higher. Thanks to three good sessions at the end of last week, Wall Street had its best week since November 2020.
Wow. Now, just before we leave the markets, Sean, the local market had a strong day on Friday, rising more than 1% to 7,182.7 points.
Yeah, that's exactly right. It was led by Macquarie Group, BHP, Rio Tinto, Aristocrat Leisure. They all did very well. Now, the best on the day was US-based gaming group, PointsBet. That was up 14%.
And the worst, Sean, was software group Appen. And another plug, make sure you listen to Elise Kennedy, our interview afterwards, because you do talk about this a bit. The Canadian bid for the artificial intelligence software group pushed up its share price 29% on Thursday.
Yes, and then the Canadian group withdrew the bid just 12 hours later, and Appen's share price fell 22%. Just before we leave markets, Michael, the Aussie dollar has been on a bit of a run over the weekend. It heads into the new week, trading back above 71.5 US cents. There's no good news on the oil front, though, with Brent crude up to nearly 120 US dollars a barrel. No relief at the petrol powers are in sight, and gold is trading around 1,850 US dollars an ounce.
All right, we'll be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese yesterday said he's committed to delivering the legislated 3-stage tax cuts despite the growing government debt. He also said his next trip will be to Indonesia following last week's Quad meeting, and he says his government's policies will put downward pressure on energy prices, which is a pretty touchy subject at the moment.
Yeah, I mean, when you list them like that, it's ironic, isn't it, that as Prime Minister, the key focus of Anthony Albanese has been the economy and national security, exactly what Scott Morrison campaigned on during the election campaign. Mr. Albanese said the response to the government's new policies in the Pacific have been very positive. Of course, this is a critical week on this front with the Chinese foreign minister in the region. Yesterday, new Finance Minister Katie Gallagher was also talking. She said it was time for fiscal discipline, and the fuel excise cut won't be extended beyond the current 6-month time frame.
All right, meanwhile, there's a bit of drama, of course, for the Nationals. David Littleproud has joined Darren Chester to take on Barnaby Joyce as Nationals leader today in the party room. And we might also get an indication today whether Labor, they've already got 75 seats, whether they'll get the 76th seat needed for an absolute majority.
Yes, it's a cliffhanger. The Greens picked up a 4th seat in the House of Reps over the weekend. 3 to go now, 2 in Melbourne, McNamara and Deakin, and Gilmore on the New South Wales South Coast. It looks like the ALP will end up with 76, and we might find that out today.
Okay. Now, as we head towards the financial year end, the Tax Office has warned against double dipping on tax returns.
Yes, the ATO has already made it clear it's going to be watching work deductions closely, and Assistant Commissioner Tim Lowe on Friday said while some people made genuine mistakes, a common error was people claiming the same thing twice. Also, taxpayers claim incorrect or false expenses. About 8.4 million Australians claimed nearly $20 billion in work-related expenses in 2021, and the message is clear: don't double dip.
It's a pretty simple message, isn't it?
Sure is.
Now, Sean, there are media reports this morning that the board of AGL Energy is having second thoughts about voting on splitting the businesses in two on June 15. Billionaire Mike Cannon-Brookes owns 11% of the group and he's against it. Superfund Hester is also against it, arguing that the split shifts the carbon reduction challenge facing the company rather than actually addressing it.
Yes, it looks like the vote, which needs 75% approval to split AGL Energy into two, one business will house the carbon-intensive operations and the other one will house a retail business. Just looks like that vote is going to be a close-run thing. Now, AGL Energy, I think today will come out and provide some sort of update on that.
All right. Now, Sean, the autumn selling season for the housing market is officially over, although it kind of ended a little bit earlier than normal thanks to the federal election. Still, there were more than 3,300 houses up for auction across the country, and the preliminary clearance rate rose slightly to 63.7%.
Yes, I mean, the number of houses up for auction was twice last weekend, though, of course, that was because of the election. The result this week ended a run of 5 weeks of lower clearance rates nationally. Both Sydney and Melbourne reported clearance rates of around 63%. Wasn't that long ago, just a few months really, that we were talking about clearance rates in Sydney and Melbourne closer to 80%. The heat's come out of the market.
Yeah, it certainly has. Number 2, telco Optus has posted higher revenue and subscriber numbers.
Yes, the group is owned by Singtel, and at the Singaporean group's full-year results, Optus said it lifted its market share in Australia, reduced churn, and added 200,000 new customers. But its shopfront stores have suffered from COVID restrictions, and there has been a fall-off in demand for data as workers return to offices. Boss Michael Venter was upbeat about the outlook, saying the company was heading in the right direction.
All right, now this is a pretty big story, Sean. Big financial services group EY has confirmed it's considering splitting out its audit division, but no final decisions have been made. This is big news in the world of finance and accounting, isn't it?
Very, very big news. The big four firms, EY, Deloitte, KPMG and PwC, are always being criticised for auditing firms and also doing non-audit work. Critics say there's an immediate conflict of interest in that. Now, the argument from the firms is that having multidisciplinary skills inside the firm makes for better audit work. There's also the issue of only having 4 big firms for hundreds of companies. Anyway, EY said it's thinking about splitting the two, though it is some way from making a decision. The boss of EY globally sent an email to 300,000 staff over the weekend, sort of saying don't panic, but we're certainly thinking about it.
We've talked a bit lately, Sean, about the pressures on the construction sector, and builders are doing it tough with a Queensland group collapsing on Friday.
Yeah, look, there's plenty of work out there, but these fixed price contracts are causing some real problems. So if a builder has entered a fixed price contract over the past year or so, since then, prices of goods, timber, windows, staff have all shot up. It makes it very difficult for some builders to survive. On Friday, Surfers Paradise-based home builder Pivotal Homes went into voluntary liquidation. According to the Financial Review, more than 100 homes of the group are unfinished, and there's further 177 contracts for homes signed but not yet started.
And Sean, East Coast Group Metricon, which is actually one of the largest builders in the country, has held talks with New South Wales authorities.
It's a bit tricky to work out what was going on here. The group's acting chief executive, Peter Langfelder, met with New South Wales's building commissioner, and he also wants to meet with Victorian authorities. Now, Metricon itself says it hasn't any financial problems, though it did need to strike a deal with its own lender, Commonwealth Bank, on Friday night to double its working capacity facility. Michael, construction is a very important sector. We've spoken about it. It employs hundreds of thousands of people, including many tradies. It has a big flow-on effect on the rest of the economy. Someone builds a house, they need to fill it with new stuff.
All right, a couple of big deals we need to talk about as well. Sean, American private equity group Battery Ventures has lobbed a bid for Infomedia, which is an ASX-listed group that provides software for parts and services and data primarily in the automobile industry.
Yes, that means Infomedia now has 3 suitors on the go, and its share price is up nearly 50% in the past couple of weeks, though only back to levels of late last year.
And the other one to mention is really an update on one of the most prolonged takeover battles of the year. IVF provider Virtus Health has recommended BGH Capital's latest bid.
Yes, now that happened on Friday, just days after Virtus invoked an out provision in its sale deal with rival bidder UK-based PE firm Capvest Partners. It's a bit of a surprise because the whole way along Capvest seems to have been the favoured candidate to win the duel, and it really has been quite a duel, with the 2 PE companies making a total of 9 bids. So far, I should add. So far.
So far. All right, moving on to overseas news, and the war in Ukraine continues with Kiev's prospects in the eastern Donbass region deteriorating, which really increases then the risk of a global food crisis.
Yes, the war is dragging on, and European leaders are trying to step up diplomatic efforts, particularly to loosen Russia's hold on grain supplies. German Chancellor Olaf Scholz and French President Emmanuel Macron spoke to Russia's Vladimir Putin about it on the weekend. Putin said he was looking at ways to unlock grain exports, but not surprisingly, he wants relevant sanctions lifted.
And Sean, I mentioned this one at the top of the show, and I've just been quite intrigued by it, really. A new study says that Buckingham Palace, if it was put on the market, which I don't think we're really talking about it being put on the market, but hypothetically, it would sell for around $2.3 billion. That's 1.3 billion pounds. Incredible.
A bargain, don't you reckon? 775 room London residence.
God, imagine trying to get the furniture to fill that. 775 rooms. Jeez.
Imagine cleaning it. I wonder I suppose the White House is another. I'm just trying to think of something more iconic. The Kremlin, the White House. Actually, in terms of non-government buildings, this is probably the most iconic building in the world. Yes, but you're right.
Taj Mahal. How about that one?
Taj Mahal, yeah. I try to throw that one into the mix, I think. That's true. It's incredible, isn't it? $2.3 billion. The report from retirement property group McCarthy Stone put the UK's royal property portfolios, that's all those castles and lodges and things like that, at about £3.7 billion, which what's just quickly trying to work that one out of my head, that's got to be close to 6 billion Aussie dollar or thereabouts.
That is quite remarkable. And Sean, just while we're still in Britain here, there are reports that Prime Minister Boris Johnson will reintroduce imperial measurements to try and attract UK voters in Conservative seats.
Yes, British shops will be allowed, but not required, to sell products in pounds and ounces. Makes absolutely no sense to me, but Michael, I'm not British.
I don't even know where to start with that one.
No.
It doesn't make any sense. But you know what? Let's just say that's just Boris Johnson being Boris Johnson, and let's move on, shall we?
Well, yes. I think it's actually a bit of a Brexit hangover because, of course, they went metric, or they went more fully metric when they joined the European Union. And I think Boris is trying to appeal to some of those Conservative voters who voted for Brexit.
It sounds like you've just coined a new phrase, to go fully metric. Sean.
To go fully metric.
I don't know if it'll catch on.
Yeah, sick, dude.
Fully sick. All right. Up next, Sean, is the Fear and Greed daily interview, and we mentioned it at the top of the show a couple of times. In fact, you are speaking to Elise Kennedy from Jarden Group.
Yeah, it's a great chat. We go through all the major Australian tech companies, and Elise gives us her view on them and just how to think about the sector generally. And we talk about the Appen deal that was and then wasn't. Elise certainly knows her stuff. I would highly recommend any investor to listen.
Yeah, absolutely. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And also, while you're there, make sure you check out the week ahead with our resident economist, Stephen Koukoulas. Obviously, a very big week this week, so it is very much worthwhile hearing Stephen's take on all of that. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 30th of May, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.